What's up, YouTube? It's Louis here. Hope you're all well. I'm finally back from Greece. I did come back on Thursday, I think it was, but I just waited until the new week to begin. So yeah, I'm back. If you enjoy this video, please leave a like. Of course, comment for the algorithm really does help support the channel. And what we're looking at Bitcoin is, as long as we're above this 18.6k low, we've been saying on this channel for months on end since the 30th of June, I think it was. As long as we're above 18.6k, Bitcoin is bullish. And the only scare we had over here was this daily close under. And I even actually told you guys that I'm not reacting. I want to wait. I want to see further confirmation because this is just a breakdown and it's not such a significant one. We didn't close really far down. If we close down here, then I'd start to worry a bit more. But we started coming back up. We started rejecting this area. There was some sort of support in and around 18.2, basically 18.15, and this is where we said, okay, now we don't want to lose this new low, but again we want to reclaim 18.6. We did that the next day and we came back down twice in 3 days to confirm that as support, and we were basically just ranging in and around here. Then we eventually broke out, and on holiday I mentioned to you guys over on Twitter, I was keeping you updated on Twitter while I was in Greece. If you're not following my Twitter yet, this is where you can also private message me if you're interested in the education, where I have the course and the one-on-one mentorship. Message me for more details. I now have a few slots open for the mentorship. So if you want the one-on-one mentorship, message me for that. But I'm also doing a 30% discount on the course for the next week. So message me about that if you want the 6-hour course with 30 plus videos, going from zero knowledge to an advanced trader, someone that can be a self-sufficient trader, doesn't need anyone else's guidance. Essentially everything is there, all the tools are there, you just need to build the house. But the main thing here is Bitcoin, and if you want to go check out my Twitter, it's Louis_crypto. We were basically saying over here that once we close this daily candle above 19.6, we would start to head towards the 55 and the 69 EMA, and if we really wanted to see Bitcoin becoming bullish, we need to see us closing above the 69 EMA. So taking out all of these resistances, you can see on multiple occasions in the past, we broke above the 55, which is this orange one. You see we rejected it, came back to the 20, actually lost it here. This signal meant that we should actually come for this low and attack it and lose this low, making Bitcoin bearish. I was explaining it on the channel back then. So if you appreciated that, thank you guys for supporting me from back then. But yeah, we quickly reclaimed it, showing that the bulls were actually there, and we closed above the 55. Now a lot of people don't know about the 69. Now go check it on your charts, on the daily, on the weekly, with the 55, and you'll notice some patterns. Go back to the past on the weekly time frame, playing with these two EMAs, and you can see we actually closed above it, which is bullish, so you'd expect bullish continuation, and then you randomly went back under. Now you could say, yeah, it's because you never broke above this, but if you wanted some other guidance, if you weren't aware of this point over here, which I was just saying, if you're not closing above that, we're not necessarily going to take off. And this was also there to tell you that as well. So you had two confirmations. So this is why the 69 might help you. You might be able to tell, okay, yes, we broke above the 55, but we want to see a close above that to confirm we're actually going up. So that would be 1 point. But then you could also add the 69 EMA, and that would be there saying that, of course, as long as we're below this, we're not technically bullish yet. So we got above it here and then quickly closed below. So we want to see EMAs held as support, and you can see these were bearish EMAs. So you can see we had a wick over here. We want to see closes above that wick essentially, and we closed back under because we never managed to actually get above this final resistance. This is why we're going to continue to see bearish momentum. And so what should actually happen is, because we never saw the EMAs flip bullish, we should actually break below 18.6k. That is what this signal means. By failing to stay above the 69 EMA here and closing under it and taking out the 20, we call the 20 the continuation moving average. As long as we're below it, we should continue down. When we're above the purple one, we should be going up. And when we went below after rejecting the last EMA, basically keeping us bearish. And bearish means lower lows and lower highs. That is what a downtrend is. So what should happen here is we should now take out this low. And we know, since we've been saying on the channel for months, since July, we do not want to lose this, as this is the first ever higher low. And if we ever do lose this, this is no longer an uptrend, because from this point here, you created an uptrend from this point. From here, you made a higher low, and we made these higher highs and higher lows. So going forward, you can't lose this whatsoever. So because we lost these EMAs, that is your signal we're coming back down to here. We also had two massive M patterns to signal that. And so that's why this area is so vital going forward. But we're also using 19.6K here, this green line, the last 2017 all-time high back over here, right there. So that's this green box over here. Draw that on your chart, 18.6 to 19.6. And so as long as we're holding this, Bitcoin is bullish. We should expect us to eventually break out of this as long as we're holding above 18.6. So what we need to see going forward is a break above the 69 as shown today. Remember when we lost it over here, that's the signal we should go down. We have not lost it. And so that means that the bearish things that should be happening are not panning out. So we need to continuously hold support, create these higher lows as we're doing, and make higher highs. So from this point here, we are making higher lows and higher highs and running into the 55 for the first time. I'm not expecting us to break it on the first attempt. What I would have liked over here, because on Twitter we were saying now we broke above this, we're now trapped between 19.6 and these EMAs. And so we want to hold this 19.6, the outside of it now. We were trapped under it. So now that we got out, that's amazing. We came into a very key resistance. So we have to expect a reaction, even if you are bullish. Even though this was a bullish breakout, you have to understand this is a key resistance. So even if you're in a bullish trade, this could be a time to take some profits because this is a key resistance. And even if you get through this while you're in a bullish trade, just know that you're going to feel some resistance here as well, you can see. So that would be a time, okay, if I was in a trade where I entered above the 20 or below and it came into the 55, maybe here would be a time to take profit. Maybe close the whole trade or a bit of the trade. Then you see it pump one more time into 69. It's not the clearest of breakouts. We've got this downtrend from a long while back as well. And so because it wasn't a valid breakout, you can see we should be expecting a reaction from this after such a crazy pump over the last few days, after the last week. It should be coming back down to this support because you went a bit like overexcited, parabolic, so to say, a bit too vertical. We fell through these EMAs, so that's what sent us back down. And that signal was that we should actually now lose this low because you're losing the support. The 20 EMAs was keeping you bullish. That's why we went up. But this here, the 69, this is why you need to add the 69 and the 55. This is telling you as long as we're below this, technically, when we come up to this, we should reject it and we should flip bearish and we should lose this last low that we created. Because now you see that we're coming down. This high is still lower than this one. So technically we're from this point up here, when we lost these EMAs, you're bearish, and that's why you should lose this. But you can see that Bitcoin has not done that. We did, and we reclaimed it. So that's a very good first step. The next step, start creating higher highs and higher low. We got a higher high here. Now we need to get above these EMAs, the 69 being at 20,000, let's just say 800, 20,800. So first of all, continuously hold 18.6K and 19.6K. Now you can see we're below 19.6K and below the 20. That means we should lose this low. Let's see if Bitcoin will do that. So what I would say going forward is that Bitcoin is going to try and come back down to 18.6K. Try. It doesn't mean it will. It can, but that's what it's trying to do. You might find support where you are right now. You might find support on exactly 19K because it's the 786. However, as long as we're above 18.6K, we're bullish. And if we can reclaim the old previous 2017 high, 19.6K, that means we should start to see some momentum to the upside. And we're going to try and tackle this previous high, which is also the 55 EMA. And once we're above 20.8K, this is good. You know, we can see that we've actually broken out of this descending triangle, which we've spoken about on the channel, which has two targets. One have the head and shoulders over here, shoulder, head, shoulder. First target, the 1618. It is also the Fibonacci target, which is interesting. The head and shoulders target there. It's also the 1618. And then also we have the larger descending triangle over here with the bearish target in and around 10.8K, which is the wave one high on the monthly time frame, which we've spoken about previously on the channel. But the final thing is, if we are actually breaking out of this resistance, when we're coming up to break this high and the 55 and the 69 EMA, you can see we've spoken about previously on the channel, this would validate this inverse head and shoulders, which I think we've seen on XRP and Quant Exactly. So I hope you guys enjoyed today's update. Please like, subscribe, and comment. Follow me on Twitter for the live updates throughout the day. And that is where I'm doing the 30% discount on my course for the next week until Monday next week. And then also I have a few slots open for the mentorship. There won't be many. Once they're gone, I won't have availability for a while. Thank you guys. I'll catch you in the next one. And as always, peace.